Hey everybody, welcome to the channel. I'm Sheen, your host. This is Money Matters. In this channel, we talk about money, finance, how to grow your money, how to invest your money, how to make money work hard for you. Check out my other videos, and if you like what I'm doing, give a thumbs up. It really helps out the channel. It pushes the YouTube algorithm, so it spreads the word and helps other people find my videos. Also, consider subscribing if you haven't already, and you'll get notifications about all my new videos. All right, today we have a beginner's video. It's about orders, how to put orders in on buying stocks with your broker. So the first one is called a market order. Basically, a market order is, I want this stock. I don't care what price it is. I want this stock at whatever price it's trading for. So let's say this stock ABC company is trading for $10. I want it. I don't care if it's trading for $10. I don't care if it goes up to $11. I don't care if it goes down to $9. I want this stock. So you put in a market order and you just say, I want this stock and how many shares of this stock do you want? And you put the order in and your broker will purchase it for you at whatever the price it is. So it could be showing for $10 when you're putting the order in, but things happen in the background. 10 seconds later, maybe a minute later, the order goes through and the stock went up to $10.60. So you're going to get it for $10.60. So it's going to be whatever price the market is when your order gets fulfilled. That is the price you're going to buy it for. So that's pretty simple. It's like, I just want this stock. I don't care what price it is. Get me these stocks. That's what a market order is. The next one is a limit order. And I personally use limit orders more than anything else. So a limit order is basically, I want this stock, but. So there's a caveat. I want this stock, but I want to pay a certain price for it. So basically, if the stock is trading for, let's say, $10, currently it's trading for $10, so you will put a limit order in. So you will put how many you want. So let's say I want 10 shares, but I want it for $9.58. So maybe it's trading for $10. So if it trades for $10, you put a limit order in for $9.58. You won't get it until the price drops down to $9.58 or below. So if it goes up to $10.20, you won't get any shares. If it keeps on going up, you won't ever get any shares. If it drops to $9.58, then your broker will purchase those shares for you. And if it drops, if it drops well below $9, you'll get it at the lower price. So for instance, let's say the stock was trading at $10. You put a limit order for $9.58. All of a sudden, the stock drops from $10 to, let's say, $8. So you'll get it at the cheaper price because your limit was at least $9.58. So you'll actually get it for $8 if it dropped down to $8. So that's what a limit order is. That's what I do a lot. I put a limit order in because usually, like I said before in my videos, I like to stagger my purchases. So basically, I'll purchase a stock, and if it keeps on dropping, I'll purchase more of that stock. So all I do is put a limit order in. So for instance, the stock is trading for $10. I got this stock for $10. So I will want to buy more of this share, but I probably don't want to pay $10 anymore. I want to wait for it to drop to buy more. So I'll just put limit orders in for, let's say, $9.75. Then I'll put another limit order for the same stock for $9.60. Then I'll put in the same order for the same stock for $9.40. So I just stagger it all the way down. Depending on how the market is doing, it could drop that fast, or it could take time, a few days or a few weeks to drop down to those prices. So I put a lot of limit orders in, and I just sit there and wait. I don't have to look at my app. I don't have to open my account all the time. As long as my limit orders are in, it's going to make those purchases automatically as the price of that stock drops. And that's basically the order that I use the most. The next one is a stop loss order. So basically, this is, you want to minimize your loss. So basically, if a stock is trading for $10 and you put a stop loss at $9.50. So basically you're saying, I have this stock at $10. If the price drops down to $9.50, I want to get rid of it. And not only do you want to get rid of it, you want to get rid of it no matter what. So basically it means I want out of it, period. I want out of this stock if it drops to $9.50. So if it drops to $9.50, your broker will automatically sell all your shares or however many shares you told them to sell. So even if it drops down to, let's say, $8, it'll get rid of it. So let's say the stock was trading at $10 and all of a sudden it dropped, boom, from $10 down to $7. Your stop loss will get triggered and it will sell at $7. If it drops to $5, it will drop at $5 because a stop loss is, I want out of this stock no matter what. As long as it hits below my price that you set, it will sell. So you will automatically sell and get out of that position. So again, stop loss means I want out, period. I want out of this stock, period. I don't care how much it drops. If it drops below my price, and below, I need to get out of it. So that's what a stop loss is. Next one is stop limit. So essentially the same idea. I want out of the stock, but, so there's a caveat again. So say the stock is trading at $10 and you put a stop limit at $9. So what you're saying is, if this stock drops down to $9, I want out. But if it doesn't drop to $9, I don't want you to sell anything. So basically, the stock goes from $10 to $9.50, it won't sell. It goes to $9.25, it won't sell. And if it goes way below or just below whatever your limit was, let's say from $10 it dropped down to $8.58, it still won't sell. It has to hit your price that you set. So unlike a stop loss again will get you out of the stock no matter what price it drops down to. As long as it's below your set price, it will get you out of the stock. But a stop limit has to be sold at whatever limit you set. So again, if it just happens to skip your limit, then it won't sell. So that could be dangerous because let's say the stock was trading at $10, you didn't want to lose a lot of money on it, and you set a limit at $9. So you wanted to get rid of it at $9, but it just dropped so fast, it went from $10 to $8. So it never really hit $9, it skipped over $9. So because it didn't really hit your limit, it skipped over your limit, you're never going to sell those stocks. So it could drop to $8 and it could just keep on dropping down to $7, $5, $3, $2, and you will still be holding on to these stocks. So that's what stop limit is. It could be dangerous if you intended to sell, but it never hits your price. So there you have it, guys. Those are the basic orders. So there's two more orders that are more advanced. They're basically a trailing stop and a trailing limit. Those are a little more advanced. I'm going to go over those maybe in a separate video. If you want me to do that, please give me a comment. Let me know if you want me to make that video. Give a thumbs up. Really helps our channel. And consider subscribing. And I'll catch you in the next one. Peace.